Every time this guy opens his mouth, it impacts me, my business, and my clients. This is Jerome Powell. Jerome is the chair of the Federal Reserve of the United States. The Federal Reserve Committee manages US monetary policy, and it meets 8 times a year to set the federal funds rate, which is the main interest rate benchmarks used by banks and other lenders to determine their loan and deposit rates. Their decision each time they meet on whether to raise, maintain, or lower the federal funds rate depends on the current and future economic conditions in the US. The federal funds rate influences short-term rates on consumer loans, auto loans, mortgages, and credit cards. Really anything that can acquire interest. Investors, and specifically for me in my industry, real estate investors, keep an eye on this rate because it obviously impacts their cost of borrowing money. So as a broker in this space, you need to keep an eye on it too, and you need to be aware of the impact that it can have on your clients. Now, at the time that I'm recording this, rates are extremely high, the highest they've been in years. But even if they're not so high at the time you're watching this, as sure as death and taxes, they will be high again. That's just how it works. These things are cyclical. So you're going to want to pay attention to what's happening with the Fed. The higher rates right now are for sure scaring people out of the market, but from what I've seen, it's more scaring newer investors out of the market, but not so much with experienced investors. Experienced investors have seen higher rates before, so to them, this is nothing new. And also, when interest rates are higher, it scares home buyers out of the market, which means that investors can now acquire the properties that they want to buy without the competition from home buyers. So how has this affected DSCR and hard money loans? Well, every time Jerome Powell raises interest rates, it affects the bond market. Hard money loans and DSCR loans are primarily from private equity lenders, so when the bond market spikes, they raise the rates on their loans. If it's costing the lenders more to borrow their money, then obviously they're going to pass on that extra cost to the end user, which is the investor that they're selling their loan to. 2 years ago in 2021, when the federal funds rate was at 0%, you could get a DSCR loan for about 3.25 in the low threes. Right now, with the federal funds rate over 5, a DSCR loan is hovering roughly about 8 to 8.5%. So what does this do to the market? Well, obviously it slows down the market. Both home buyers and investors are doing less purchases and less refinances. So as a loan broker, here's what to do when interest rates are high. So if an investor is buying a rental property, advise them to be more selective on the property that they're buying. Even if the cash flow isn't there because of higher interest rates, so higher loan payments, if they're buying a property where at least they're getting great value on the deal and good equity from day one, at least it's a great long-term investment. So if they don't have much cash flow in the short term, in the long term, they have a lot of equity in the property. Now, sometimes as a broker, that might mean you talking yourself out of a deal because you're advising an investor not to buy a specific property because it isn't a great deal and they're not getting cash flow. But you got to think long term about this. This is how you build relationships with your clients. You advise them, you consult with them. Another clever strategy that you can implement as a broker is you can tell your investors, hey, the standard prepayment penalty period on a DSCR loan is 5 years, but the interest rates are pretty high right now. They should be lower in a couple of years. So you can advise them to buy down that prepayment penalty period from 5 years to 1 year or 2 years or 3 years. They pay a slightly higher interest rate or a slightly higher origination fee, but now they can get out of that loan by refinancing it with no penalty when the rates do drop. I'm doing a lot of that with my clients at the moment, so a lot of them are buying down the prepayment penalty period. That's a very good strategy that brokers can implement. And of course, if you do that loan for them now, guess who they're going to use in a couple of years to do the refinance? They're going to use you. Now, if getting into a high interest rate loan for the long term is just something that your client does simply not want to do, then maybe a good strategy for them at the moment, and maybe something you can advise them on, is instead of getting rental properties, maybe do some flips, maybe do some purchase and rehab projects. Buy a distressed property, put some money into it in rehab and sell it. And then bank that profit and keep that profit to the side to use for rental property purchases in a couple of years when the rates are lower. To be a successful broker in this space, you need to be able to consult with your clients and advise them on different investment strategies, so you can provide them with options and solutions to really maximize any investment opportunities that they come across. That's how you build a long-lasting, trusting relationship with your clients. So Jerome Powell raising interest rates all the time is obviously frustrating, both for us as brokers and for our investor clients. But knowing what to do in an environment like we're in now, a high rate environment, is what will make you stand out as a broker in this space. And if you really want to stand out from your competitors, I'm offering coaching on how to make well over 6 figures a year as a DSCR and Harmony loan broker. In the description below, I'll put a link so you can set up a call with me, and I'd love to chat to you more.